Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 20th, 2024. And not too much has changed since the last update, but today I want to talk about if Bitcoin truly is losing steam and if we can truly expect it to reverse course and dump, or are we indeed on the brink of a massive breakout? So I'm going to address that question. If that sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get started. Today I want to dive into Wyckoff analysis. If you follow my work and you are subscribed to the channel, you know I do use a lot of Elliott wave analysis, but I also like to make use of Wyckoff analysis to diagnose tops and bottoms. I think that is really the gold, not the gold standard, but one of the best uses of Wyckoff analysis is looking at these consolidation channels, right? An accumulation at the bottom or distribution at the top. So since we're at the top, this would be called a distribution. And I do have a schematic from Wyckoff's analysis schematics. And I believe that Bitcoin is right now in phase C of its distribution. That is actually the final phase that you see before the declension, before the drawdown, okay? A lot of people are saying, well, Bitcoin is pumping and it has been pumping, accept it, right? All these analysts providing no analysis, right? And the analysis is quite weak insofar as there's no acknowledgement of these corrections that we keep experiencing, right? We're clearly chopping up and to the right. But again, as I mentioned in the last video, when you're exposed, when you're trading, emotionality kicks in, and it doesn't matter what your training is. Obviously, you're going to have to expend some effort to remain objective if you're in a trade and you don't want it to go against you. So it's just human nature. So yeah, looking at the chart, we can clearly see I kept the rising wedge. This is more likely than not a rising wedge than an ascending triangle, which makes it a bearish pattern. We talked about that. But today, I really want to get into the Wyckoff analysis. So, Wyckoff, turn of the 20th century, talked about how, price basically goes in a cycle from accumulation to an upthrust or a markup to a top, and then at the top it does a distribution, and then it marks down, and then it just goes back again. And so understanding the times before the big moves down and up will give you as a trader an edge. That's one way of understanding Wyckoff analysis, and I think it's quite true, right? So the issue we have is trying to predict or foresee these large moves, right? That's where you make money, where you have big deltas, big volatility. And here you don't really make money, but you can position yourself for eventual moves, right? Here let's say we did pump, it would be a continuation. This would be called an intra-wave consolidation. But if we did drop, then the real savvy trader would position themselves short in these regions or offload supply, right? Sell and wait for lower prices to buy back again. So that's the idea. So I contend, as I did in the last video, that we're running out of steam. That this is not a pump, but it's a sideways consolidation, and this is just part of that, okay? And I talked about yesterday, in the accumulation schematic, you have what's called a spring, but in the distribution schematic, the equivalent, or excuse me, the analog is a UTAD. And the UTAD stands for up thrust after distribution. Okay? So let's look at a larger one, because I know not everybody has like 20/20 vision. Let's look at a larger version of this, and you can see it online. Let's open it up in a new tab. So you can see here, I contend that Bitcoin is right now in this area here. It seems as if it's going to break the channel to the upside, but actually it's just part and parcel of this larger consolidation. Okay? And if you look, and this is why I kind of wanted to put the schematic on my trading view. If you look, you can see a lot of similarities in Wyckoff's distribution schematic 1 to where we're at with Bitcoin here. So you can see here, that would be the buying climax here. Okay, I can label these properly if you guys would like. It won't take me long. So that would be the buying climax, right? Right here. And that's the automatic retest right here. So right here, automatic retest. Okay, and then over here, let me make this smaller so I can have space. This is the up thrust. This would be the up thrust, yeah, right? And if you go in on the site that I just pulled this from, you can see proper explanations of each of these phases and each of these moves. But Wyckoff contends that you essentially see this general schematic in all tops. And then for the accumulation, it's this flipped on its head, and you can see similar things in all accumulation schematics. Extremely useful if you study this. I've seen it a lot in my experience trading, that yes, indeed, these charts do resemble one another when making tops and bottoms. So this is my UTAD. Obviously, this can be invalidated with a legitimate pump where the range is properly broken. But in this case, you're not breaking the range, you're wicking above it. And I mentioned this yesterday. This is the same thing in the accumulation phase. What this does is twofold. One, it's a test of liquidity on top here. Okay? So markets, like electricity, like water, seek liquidity. So there's money here from people thinking that it's going to go higher, so they're buying the top. That's one. The second thing is, there's some people that think, oh, we're at a top, and they're shorting, but they're sloppily placing their short stops, or their stop losses way too close to the site of action, right? They're over leveraged, and so the market grabs all of that liquidity. It grabs liquidity from the longs, it grabs liquidity from the shorts, but the longs, they grab the liquidity happily because the longs think that it's going to continue. And then what happens in the next phase, once it goes into phase D and the declension starts, those longs start also being squeezed because their shorts are here, 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 and here, especially below the range. Okay. So it goes into what I was saying yesterday. It's likely, if this is indeed true and accurate, what you're going to see is a long squeeze whereby there's a what's it called? I'm losing the words here. It's kind of like a cycle, or a, because it'll force longs to buy or to sell. It'll force longs to sell in their stop losses. It's a chain reaction. That's what I was looking for. It's a chain reaction hitting the stops for the longs down. Okay, right now it's grabbing short sellers stop losses, who are, short sellers that are, that weren't expecting it to come up here, which they should have, because a lot of really strong assets like Bitcoin, right, when they go to all-time highs for the first time in a while, they display this UTAD, right? That's just really common. You have Michael Saylor buying up here, buying the top. You have other big accounts buying the top, right? They are really creating a lot of buying pressure, and that causes this distributive channel to be prolonged and to create that upthrust after distribution. But it's invariably the case that after this you get your drawdown, and that drawdown looks like this. You go down the channel, test the midline of the channel, and then you just you draw down properly, in the way that we discussed yesterday on the in the episode. So yeah, that's what I'm seeing in Bitcoin. Obviously, we have yet to see, but we should find out soon if my read on this price action is correct. A lot of people confusing price for price action. Crypto Twitter, always very entertaining, saying, hey, we just hit all-time high again. You guys clearly don't have enough Bitcoin. Why is nobody excited? You guys are blah, blah, blah. Like, it's not very compelling. It's not the most bullish chart I've ever seen. If people aren't buying, it may be because, or if people aren't excited, it may be because they recognize that this is not a sexy chart. It's not a particularly bullish chart, okay? And so you do have a high probability, nobody knows for sure, for 100%, a high probability that this is going to break down. And the altcoin market is front running this. As you can see, most altcoins are clearly in the red. Well, it just changed because we hit a new daily. But before we went into this new daily candle, most our altcoins were in the red, given that they're also mirroring Bitcoin's sort of price action, but they're kind of front running it. So that's all I have. I do expect, if Bitcoin does indeed pull this move, for altcoins to also decline significantly. Maybe a little less than Bitcoin though. Some more, some less, but I expect the whole market to go down if Bitcoin does come down in this move. So I would wait before getting into any positions, either spot or leverage. I see a lot of people buying certain altcoins thinking that they've hit the bottom, but I would never, assume a bottom, especially before a big Bitcoin move to the downside. So that's all I have today. I hope this was helpful. I hope this was useful. I really am a fan of Wyckoff. I'm not a big Wyckoff volume guy. I don't use volume anymore. I did in the beginning of my career. That's another discussion for another day. And volume is a big part of the Wyckoff method, but I particularly like this aspect of the Wyckoff method, the schematics of the tops and bottoms, the distribution and accumulation ranges. All right. Yeah, and I find that useful, so I welcome everybody to read about it. It's not that hard, and it doesn't take that long, and it's super helpful, and it could probably potentially make you a lot of money and save you a lot of money. All right, that's it for me. Take care. See you tomorrow, or maybe if there's something compelling to update. If not, see you soon. Bye. Oh, like, share, and subscribe. Consider buying me a coffee at the pinned comment below. See ya.